Your guide, your path, your compass, your desk, Freeman Douglas.
All right, so we're here at the Homebuyers Huddle, and I have Audrea, your host. I'm just introducing your host, Audrea, here. And what are we going to talk about today? And Audrea, I want you to, tell yourself, but I also want to, introduce you properly. Audrea is here from Next Home, not Next Home Assurance Realty, but now it's Next Home Endless Summer. And what
Absolutely.
they did, Andrew Bell, the broker at Next Home Assurance Realty, and then the broker at Next Home at the Beach, Angel Decker,
Right.
kind of high-fived and shook hands and got more coverage area to cover all of Northeast
I
Florida.
believe we cover all the way down to a little bit past Daytona, or just our offices. We have 4 offices, so just our offices, we have all the way down past Daytona, I believe.
Right, and then I know you personally.
We're both Marines.
From taking you to Detroit, I know you, but yeah, definitely both in the Marine Corps.
Ooh, Semper Fi.
And Semper Fi. And let's see, so you now cover, because you've told me a couple times, I've asked you, we've gotten some loans in, hey, where will, I've got a client that needs some help with selling their home or being shown some properties, and it's a little bit, 45 minutes out of your coverage area. But what was your response to that? You told me you'll do all of Florida.
Well, I always need a reason to go to Miami.
Okay.
I can always use a reason to go to Marco Island. And
yeah.
Key West, I'm always down for
Very
Key
nice.
West. So if it's inside that little state of Florida, I'm licensed to go. And I'm going to be licensed in Tennessee soon. So whether you're going to the beach or you're going to the mountains, I can do you.
Tennessee's beautiful. So what are we going to talk about today? Investing in your home.
Yeah, absolutely.
I think it's a good topic that people, don't really think about, the equity once they get the house.
Right, absolutely.
And I know you deal with a lot of sellers as well.
I deal with a lot of investors. I do.
I think you have like 4 properties. Is it 4 properties now?
Right
there
now,
more?
Today, I've got about 6 properties just in investment. That's not buyers and sellers per se. That's investors and investment properties.
Right, right. And you have to look at how those are valued, obviously, and give some sort of analysis on how much those would be worth to the seller.
Yeah, absolutely.
Right.
And also, what can you do on these properties? Are they commercial? Are they zoned commercial? Are they zoned for high rise? Are they zoned for multifamily, residential family? What can you do with them? And that's a huge thing because investors, not everybody wants to do a house, and not everybody wants to do duplexes. I mean, you would think every investor wants a duplex, but
Right.
so the properties, the investment that I have, and I'm telling you, I probably got a list of, 60 to 80 investors that whenever I get an investment property, I just hit email, who's going to pop up and go, I might be interested, let me know more about it, that kind of thing,
Right.
So investments is a huge thing here in Florida, huge.
So if somebody is investing in a property, what are they looking for?
Right now, a lot of people are holding. They're buying and holding. And if it's just land, obviously they can't do anything unless they're going to build a house on it or commercial something on it. But a lot of people are in just buying and holding.
Right.
Now, obviously, if it is a house on it, like for you do yourselfers, DIYs, it is not like the DIY on HGTV. It is not like that. But I know you do lending on those kind of homes,
Right.
don't you? I
Right.
mean, because you help me with all my investment properties.
Right. Yeah. I thank you for trusting in me to do that. So, I've told you that multiple times here on the air. So, I think that, a lot of people do, there is a market shift between some people who are lending or some people who are investing in like fix and flips or renovations and then holding. There are, communities that just buy, refinance, renovate, rent, refinance, and repeat, right? The BRRRR method.
The BRRRR method.
I know that's pretty common here in Northeast Florida. And maybe other parts of the country as well. But having that book of business to bounce ideas off of or bounce bounce properties off of and get them sold quickly or moved quickly or whatever the goal is for that investor is definitely. I mean, I'd say that's the way to do it. I know that I do that with my anytime somebody comes to me, and I have somebody who's, hey, I'm looking for a realtor. You know, I'm going to send them to you, or you know, kind of goes in a round robin.
Right.
But if it's something that I think that, you know, requires a certain person, then I get them with that person. And that's why these, you know, having you're not only interviewing clients, you're interviewing lenders, you're interviewing other realtors. And I like to talk about a little bit also, because this does tie into if someone is trying to build equity and how do they trust you. So you can't work with everybody. A realtor is not going to go and work with certain clients as they won't work with certain brokers or title agents and so on and so forth. But it is important for the end goal for that person who does own the house to have the best team in place, right?
Absolutely. I mean, the reason why we started working together is because you was in the Marine Corps. And I'm like, I know he's got integrity. So I know he's going to be there for me. And so, you know, you can't work with everybody. So you definitely, no matter what job you have, if you're the buyer, you're the seller, you're the investor, you're the realtor, you're the lender, you need to be comfortable with them.
Right.
And, you know, if I wasn't comfortable with you, I wouldn't be working with you.
Right.
And a lot of investors come to me, or buyers and sellers, buyers come to me because not only am I an ABR certified, but I'm a pretty good negotiator, and I'm listening to things that you may not necessarily tell me, but I'm hearing it. So, you know, and I can also negotiate things that you might not necessarily thought about.
Yeah, that's true. And I mean, some things have came up in some of the deals that we've done. I think we had a hairdresser who was looking for a home, and they wanted to do business out of their home. They were from another country. So these processes are, you know, I find them to be very cumbersome in every event for the realtor and for the mortgage broker. Now, we're good at the job because we constantly do it, but if that kind of translates to the borrower or to the seller or whomever's involved, it can be a nightmare. It can be just a dumpster fire. And I think that a lot of times that we don't realize that the property management, so to speak, or project management comes from having a central person in charge. And as the lender, I may think, you know, or the mortgage broker or loan officer, I may think that this is, you know, going to be me, but I can control what I can control, right? And I think that the realtor is the one who is that project manager to get through each one of these steps along the timeline. And that's beneficial to everyone. I mean, because you're going to get to the goals. So the communication, like you said, between working with one another is definitely a good thing. And I mean, you have to be able to communicate through those times, come up with ideas, be able to brainstorm with that person, and feel freely to do so. Because if you don't, you're not going to get the solutions, those off the wall, you know, things that come up, and you got a solution for it. And it's, you know, no blame game type of thing. You just, you know, do the job and do it to the best of your ability. Sometimes I know you text me late at night. I'm up late at night. I've got people in, you know, Japan on the boats out there in the sea doing loans. I know you've got people on the other side of the country doing deals, PCSing over here.
Yep. I've done quite a few, and you just have to be available. You know what? The number one thing I think I do, and I think you do, is we actually answer our phone.
That's true. Or send you a text that say I'll get right back to you.
Or I'll get right back to you. But I can't believe, and you have to tell me this is true, I can't believe how many realtors and lenders, but specifically realtors, who have those beautiful banker hours, 9 to 5, and you have to call me tomorrow. And if you're sending me a contract at 6 o'clock, that's got to wait till tomorrow. Yeah. Not me. You and I have been on the phone either texting or calling at midnight.
Yeah. I remember 2 a.m., but yeah, midnight is pretty,
okay, well, you didn't have to go there, but you know.
Pretty standard. Pretty standard is midnight. And I mean, so you got to think about it. If you're working the same hours as somebody else is working, are you really serving them, right?
No.
So if they get off at 6 o'clock and you get off at 6 o'clock and nobody can call you.
But you know what? I'm telling you, I had a couple here. Remember the couple that was coming from Pensacola? He just got out of the air school. So he gets here and we go look at houses and they're like, hey, we're going to have an open house in 3 days. Can they come back? And I'm like, no, they can't come back.
Right.
They're here on orders. They're only here from this time to this time. Can't we see it today? No. We're preparing for an open house in 3 days. And I'm like, I got people here with money in their hand wanting to spend it.
Right.
And you want me to wait. It happens all the time.
Yeah. Yeah. That's, I mean, again, service to the client, right? And these are things, like I said, it's a really cumbersome process. And I think that if you are working with professionals that you just don't see any of that stuff.
No,
and
no.
you can list it, and it's kind of cringy to go and list all these different things that you do, these 150 things that you do, but it's actually your assistant that's doing it. I don't think you have an assistant. I think it's all you.
No,
you are the assistant.
All me. I love it.
Yeah.
You know, I just absolutely, what I love the most about real estate is I love all these little things that I have to do. Like as the project manager, I have to get the lender, and then I have to get the appraiser, and then I have to deal with repairs, and then I have to find the repairman guy, and then I have to find out, hey, you are allergic to carpet? Oh, well, let's take care of that. And so I'm just constantly fixing problems the whole entire time. I love it, love it,
Right.
love it, love it.
Right, I do too. Yeah, Audrea, hold on. Do you like feel sweaty? I want to take these headphones off.
It's really messing with my hair,
Right
man.
on. Right on. And my ears are sweating.
Yeah, so let's just get rid of the headphones. Let's just keep it real, down to earth.
Absolutely. So let's talk a little bit about, I guess, the equity. We got to go through this. So in home buying, I mean, a lot of people don't know what equity is. Basically, the difference between your mortgage, how much you owe on the house, and how much the house is worth. So if we're looking at how much a house is worth, that value comes from appraisals, comes from what they call comparisons in the market, right? And then obviously your mortgage is how much you took out on the home. I found out recently, we talked about this, that realtors can do appraisals, and it's not really an appraisal, but here in Florida, it is a comparative market analysis.
Absolutely.
Can you, explain for everyone how someone would value that as selling their home?
Well, a CMA is what we call them. And it's extremely important because you got to have a value, a basis line of what your home is worth. Because everybody thinks that because their house has got a white picket fence in front of it, now their house is worth $40,000 more. And that's not the case. Yeah. It happens all the time. I hear it all the time. Oh, I just bought a brand new mailbox. Can I add that $10,000 to the value? No, you cannot. You cannot. So anyway, so the CMAs are hugely important in that we take your home and then we do actually see all the upgrades and the age and all the things about your home that makes your home very special. We take that and then we add like homes that's sold in the last 6 months around your home and the homes that are for sale at the moment. And then we got to make your home look like the juiciest steak in the cow. Okay. We gotta find out what makes your home the most special. And then we add things to it to, maybe we could add a warranty, or maybe we could do a pre-inspection, or maybe we add a termite bond or whatever. We just got to make your house look the most captivating. And from there, we come up with a price of what we think your house might sell for. And right now, the average home, as we're doing this podcast today, the average home on the market is about 86 days. In Northeast Florida. Is
that a long time?
Well, if you were buying or selling a home 3 years ago, it was, but the average for about the last year or so, it's somewhere around the 86-day market here in Jacksonville, Northeast Florida. So, obviously, if you want to make your home sell quicker, then you might want to add things to make your house more appealing. But you don't want to go crazy. You definitely want a realtor to talk to find out what things are the things that will get you your ROI or your return on investment. You want to do things that will get that back for you. Like for example, working on a kitchen. A kitchen absolutely will give you most of your investment of whatever you put in that kitchen. You'll get most of that back. Yeah. Another thing that will get you your return on investment is bathrooms. Most of what you put in there will get you your return back. Painting your bedroom peach will not get you a return on your investment. Putting in a fancy garage door, even though it looks beautiful, probably will not get you your return on investment back. And then lastly would be the curb appeal. Curb appeal is, everybody wants to live beside somebody that looks nice. You don't want to move into a neighborhood and your house be 4 feet of grass and some of the soffit missing or some of the trim on the back side of the house. You don't want that. And so curb appeal is huge important as far as getting for that comparative market analysis, the CMA that I was talking about.
Right.
These things are things that will help raise that price.
Right. So value is definitely obviously important in building equity, and then if you're adding these costs. Obviously, you want to get the return on it because the equity is like a savings account. Right?
Absolutely.
You put money in, and I tell some of my first time home buyers, like this is a process. This is a home ownership journey.
Yes.
And my company, my personal company, I like to network with other folks. So it's financial advisors. There's landscaping. There's roofers. There's everyone in this network that can help these home buyers and homeowners realize what the true meaning of home ownership is in the country and gain wealth doing it. So, you move into a new home, it may not be your forever home. It may be a run me down. It might be what they have a renovation loan, 203K. And then, you live in it a couple of years and, inevitably you can get into a different loan where you can use the equity to refinance or to take cash out of that.
Absolutely.
And put a down payment on a bigger home, or, your family grows because life happens.
Right.
Families get bigger, families get smaller. But the idea is to take these properties and invest in them so that you have a retirement. This is a 30, 40-year game.
Absolutely.
Right?
Like we've spoke about before, you needed to make a decision early on as a first-time home buyer or even a fifth-time home owner. Is this your forever home or is this your right now home? Right. And it's okay if your forever home turns into it's a right now home. Maybe you get a new job and it takes you to, Tupelo, Mississippi or something. Or
life happens.
Life happens. Now you've got 3 kids and now you're having triplets. Life happens. You are involved in an earthquake and your family has to move here. Life happens. Yeah. So, whether it be your investment property, your forever home, or your right now home, life happens. So, it's okay. And I'm sure you've got loans in place that will allow you to adjust to that.
Right.
Life happens.
There's all types of products. And I mean, that's the beautiful thing about working, for the company that I work for, the brokerage that I work for, is that we have a lot of products. And there's a lot of great people at these lenders who understand the brokers, my goals. And my goal is to understand the client's goals as much as possible. So, I mean, that's another reason why we work together is I don't align myself with, somebody who doesn't have the same moral turpitude as I do, someone that will have the same patience to get the client to those goals. Because I don't want anybody with any cognitive dissonance. I don't like being reprimanded, so I don't do things wrong, right? And I'm not here to try to get a dollar from someone or anything like that. I like to see people happy at the end of the process and build advocacy, right?
Absolutely.
For my business, but more importantly, my kids have to grow up in this community, right? They have to grow up in this world, and people got to think about that. Money's not going to save problems. If you're building a community landscape that your kids can go and it's a foundation for them. That's what we're trying to do here. Obviously in Northeast Florida, but across the country as well, right?
Well, it's super exciting just to be a part of a first-time homeowners. It's super exciting to be able to be a part of that because they chose you or they chose me. They chose you to work with. And we've worked with several together. We've worked with several people that were first-time homeowners. Right. And it's exciting to be able to go, hey, I like this one, but maybe not that one. And why you don't like that one. Right. And then, let me hook you up with Douglas. Has Douglas called you? Douglas will be calling you. Hey, this, honestly, I don't even have to tell you. I give you name, I give you address. Here's what's going on, and you do everything that you do. So,
I was surprised. I recently mentioned to someone, and this is how quick realtors are in this market, and some of the realtors that I work with. But I mentioned, hey, I might be thinking about selling my house, and I have this whole long list of just things. I didn't even finish the sentence, and I've already got that comparative market analysis that you were talking about. And I was learning things about my property. I had no idea. I had no idea about these things. How many parks are nearby, how many schools are nearby. And just, square footage, dollars per square foot, so on and so forth. And it gives you a really granular look at your investment and, the dollars and cents of it, because, you can break things down into, how much does it cost, or how much do I have to make per second to make $1 million this year, right? Like,
absolutely. Break it down.
Yeah, you don't want to say, I need $20 an hour to make this. I want set the goal. This is what I do in my life too. I set the goal, and then I work backwards from the goal, right? And if my next step doesn't align with that goal, we don't do it.
Right.
And I believe that a lot of, that's some of the things that I teach, my clients in first-time home buying. And it is a great feeling to have that person feel empowered, have them have the confidence to do this, and to know that, things are going to be okay on the other side of it, because they are. For the most part. Now, we can't predict the future. Everybody's saying, hey, you got the crash bros, you got the, people with recessions, and we got to define what recession is and things like that. But, people will always need a place to live.
Right.
People will always need something to eat.
Yes.
Right. So these are two industries that, they fuel our economy. And
I think it's extremely important that you just said, real estate, you need a place to live. That should be your number one priority. And then a place to
eat.
Yeah. Obviously. But our role in this, there's so many things that a first-time homeowner doesn't know. They don't even know, like, to get an appraisal, or to have an inspection done, or, and that's what we're here for. To be able to help coach and guide them as far as, okay, we're going to need to do this. We're going to need to do that. We need to add this on. And sometimes it's a cost, sometimes it's not. But I think it's awesome that we are part of that experience of, being a good sounding board to them.
Audrea, there's a difference between an inspection and an appraisal also. And that's a big thing that people don't know. So the further we get into the business, the further we build our knowledge, right? Because of all these quirky, cumbersome things. I like to remember my first experience with home buying. My wife and I, we went to a bank. There's BB&T. I'm going to just say them because, you are who you are, right?
We went to Bank Boston.
They're very conservative, right? I banked with them for a while. I liked the bank. But when we went to go do a mortgage, it's a whole different story.
Oh, absolutely.
Now, you got to know that, there are loan originators there.
Right.
They're not doing a ton of loans. That's not their primary business. Their primary business is checking accounts. They did great at it. Checking accounts, savings accounts, car loans, personal loans. Right. When it came to a mortgage, the lady... And come to find out, this was illegal, but the lady didn't even let me apply with a 646 credit score and $3,000 in the bank.
So now, since you said that, what is the lowest credit score that someone could come in with right now?
So typically you want to be around 580. That's a safe spot.
Okay.
Right. And this is for an FHA loan.
Right. Okay. What about a VA?
A VA, I've done a 527 this year.
527. Because I just got somebody the other day that had just slightly above that. So
I sent it, and it was, I had confidence in it. My motto is high confidence, full send. If everything looks good, it's going.
Yeah.
And I'm just waiting the whole time, like, all right, everything looks good. Everything looks good. That one I wasn't, high-fiving and high-fiving anybody until the end.
Right.
It actually turned out really well. They had $17,000 that they were pulling out of 401k to put down.
Ooh, okay.
They ended up closing with $259 cash to close.
What did you just say?
$259.
$259
so
cash to close?
I'm not bragging, because that's just the way the cards fell. That's not going to happen for everybody, obviously, right?
Okay, explain to me cash to close, just for the ones who don't know.
So cash to close is when you have your closing costs, and your closing costs incorporate all of the fees, the escrows.
Okay.
You have your down payment requirement. In this case, there was no down payment requirement. You have a funding fee on a VA loan.
Okay.
If you are not disabled, even 5% disabled, most veterans get that 5% disability, and it wipes out that funding fee.
Oh, absolutely. So
5%, if you shot a rifle or heard a bomb, heard somebody talking about a bomb, I got tendonitis in my ear, you go and you file for your 5%.
Right.
You'll get your 5%, and it'll wipe out that funding fee, and it's thousands of dollars. In most cases, I've seen people pay $27,000 in a funding fee, and you can finance it, but I mean, it's really arduous in your process to try to come up with that money, and then your debt to income raises, and if you're financing more money, well, your purchasing power is now going to go down, right? So you want to kind of keep away from certain things like that. So in the cash to close, so after the down payment is taken care of,
Right.
which in this case was zero,
Right.
the reason why they did that is because they got seller concessions.
Oh, wow. Seller concession. Yeah. I mean, I try to get a lot of seller concessions. I try to negotiate. I negotiated them pulling out carpet and putting in a new floor.
Yeah.
Yeah. It happens all the time. Or
Do you feel like everything can be negotiated?
I feel like everything can be negotiated.
You really feel that way?
Yeah. I mean, obviously it depends on, because, everybody feels like their house is worth $1 million.
Yeah.
They put that purple paint in the back bedroom and they feel like, oh, I got to get my money back out of that. So
it's interesting. I just want to, so it's interesting. You said house, right?
Right.
And people, like, these are the things that people don't listen to, right? So you said house. When you're trying to go to negotiate with a seller for your buyer.
Right.
Now, if you were negotiating with the seller, what word would you use? Would you use home? So now, because you're taking a sentimental value.
Oh, yeah.
So we're using house and home, right?
Oh, yeah.
So when we get to, with someone we're selling the house for at a higher value, right? We want
If I'm negotiating and I want, that's a house.
This is a house. This is damn near a lot.
But that's my home.
Yeah.
And,
right.
I spent a lot of money on that purple paint.
Right.
Yeah.
Exactly.
So now let's get back to credit score.
Right.
What if my credit score sucks? I mean, what if it's like, what if it's terrible?
I don't even want to talk about credit. I know that. So there's a lot of things to do for credit. Now, this situation with the bank, I had a 646 credit score.
Right.
Right. And the bank said they had their, what they call overlays. And they'll only do specific loans. They will not do outside of their parameters.
Right.
Theirs was 660.
Oh, okay.
And the lady didn't even let me apply.
Oh, wow.
Not at all. So we went on our merry way, still working, cozy family. And my wife was working at the time, and she met a realtor while she was working. He had his name. I'm a huge proponent of having your name tag on all times, who you are, right? Because that's you can get business that way. People, you're a professional. It's the same as wearing J&R Roofing or whomever you are.
When we went to Detroit, I had my my realtor badge, but my Marine Corps realtor badge on.
Right.
And I had so many people like their neck was breaking trying to read what it said on there. And I'm like, that's right, it's a Marine.
Yeah.
Marine
Come
Corps.
closer.
That's right. Come closer.
Right.
It's a Marine. That's
Right.
right. So the reason why I love working with you so much is you are one of the most creative financiers I've ever seen. I mean, you can get stuff financed that I'm just like, it's a 580. I don't know if you can do it or not.
Right. Well, we try. I mean, like I said, that having a low credit score, there's in my story, the bank just forgot about us. Didn't let me apply. Come back when you got a 660 and 10 grand in the bank. That's not the way, right? That may be the way for banks, but we're talking about landscaping the future of our community, right? Yeah. Bank's not going to give you a deal unless you're doing $40 million in business. They're not going to give you a free loan and all this. Are you crazy? No. You're not doing anything for them. Just because you banked with them for 30 years.
Don't mean that.
It's harsh to say, but I mean, that's the facts.
Yeah.
And then got their managers who getting paid, and their managers getting paid, the regional, the district, everybody across the country is getting paid on your little first-time home that you might not be in forever, right?
Which to us, I mean, I don't care if your house costs $199,000 or $99,000, or if you're $1 million home. It doesn't matter to me. I'm still going to give you the same amount of effort, the same amount of energy, the same amount. Hey, you can call me.
It's the same amount of paperwork.
Yeah, same amount of paperwork.
Yeah.
So it doesn't matter which house, which price.
Right.
I still got to do the same piece of paper.
Right.
Absolutely. Yeah.
Yeah. If there's anything you have that you can explain. You've already explained like the value that having a realtor kind of head up that project or just give advice, right? We spoke a little bit about, how the values of the house, where you were doing comparative market analysis. I went And I just went back to 2017, 2018, 2019, and I saw my value of my house increase by probably about 3.8% per year for that. I did the numbers, obviously.
Okay.
I'm not like throwing something at you like, hey, I'm going to get you to calculate right now.
Right.
But I did those numbers. What I saw was in 2021, it doubled.
Oh, wow. Mm-hmm.
Doubled the entire price of all of that. So it was 3.8%, and then it went up 100%. And then the next year went up another 80%.
And you talking about your house?
Yeah, the value of the house.
Yeah, that's
and
crazy.
A lot of people were going with this. And like, so what ended up happening is people saw that, turn times got longer, but materials started costing more.
My husband just went today and was looking at a piece of corrugated plastic to use as a roof for our cycle shed. And I remember very clearly costing $25, $32, something like that. He went yesterday or today, and it was $87, and it's half the size it used to be.
What is this for? $87?
It's a piece of corrugated plastic that you use on the top of a building, like a shed or something. Right. And I remember very distinctly it costing anywhere from $25 to $32, somewhere in that neighborhood. And today, $87, and it's half the size.
That's disheartening.
Yeah, it's terrible.
Yeah.
It's terrible. That's another reason why you want a realtor, somebody who knows things like that. Because I'm telling you, there are people out there that will take advantage of you all day long. Take advantage.
I mean, if you have money. So if you picture this, you have $40,000 in your house in equity.
Yes.
And you want to take $20,000 out or $10,000 out to do a renovation on a kitchen. Do you think you can get that done with $10,000?
No.
Right.
No.
So, I mean, this is something where we need to kind of see the goal. And there's something behind that too, right? So this is the extra part of the job that a lot of people don't do. There's something driving that goal, right? Yeah. So, yeah, this is a transaction that we want to do. This is a milestone of what we want to do. But, more importantly, I find, why do you want to do that? I'm just curious why. Well, my grandmother's coming to live with us, and she's not going to have a dirty kitchen. I remember growing up with her, and she ain't going to put up with this.
Plastic on the furniture.
That's something else. Now you've got another person coming into a 1,500, 1,600 square foot house that's already got kids, and maybe you need something bigger.
Absolutely.
Right? So there may be a different answer that a lot of people aren't looking at. And this is talking about, so investing in your home, but we're actually investing in the home ownership journey, right?
Yeah, absolutely.
And you use these assets as kind of like the vehicle to get there, right? So that you can live a nice life at the end of all this, right?
Absolutely.
Maintenance is a big thing, and I think that like things like windows, now upgraded windows, sure.
Absolutely will bring your retail, your return on investment.
Energy saving,
yes.
Upgraded
and
windows.
Here in Florida, Cat 5 hurricanes, most of the window companies nowadays, when you buy them, unless you buy the $1.49 windows, most windows are somewhat hurricane proof, resistant, something to that line, which is something that you're going to want to, obviously look into. But yes, windows are definitely a maintenance that you want to consider. Answer me this question, and you may or may not have the answer. I don't know. The jury might be out on it. So I know that there's been a lot of issues with roofs here in Florida, and I was told that they're a maintenance item and not an upgrade, because people go, I put a new roof on the house. Well, that's great for insurance. It'll pass insurance, but is it adding value to the house? Absolutely. It is. Yes. It's a sad thing. Us growing up, our mom and dads had roofs on their house, and the roofs were going to last 30 years. Absolutely. But today, especially in Florida, the insurance companies are saying, hey, even though you've got that architectural roof and you spent $15,000 on that roof, or 20, whatever the case is, if it's over 14 years old, we may need to start backing down the value. So I'm not telling you to go out and buy a new roof at 14 years, but you definitely want to have a roofer come out. And I just found out yesterday, a roofer told me that if more than 25% of your roof needs to be replaced or fixed or whatever, that in the state of Florida, you have to get a whole new roof. Oh, wow. So, who knew? So, it may be a maintenance, it may be an upgrade, but definitely if you have an upgraded roof, you've replaced it, you've, fixed it, put a new one on, that definitely adds value to your house. Absolutely. Right. Absolutely.
Yeah, we know there's, you can do additional units and things like that, obviously additions, but yeah, adding a new roof, I guess in Florida is
Florida is just a different animal as far as a lot of these things. Because if you were in Iowa or Kansas or somewhere like that, you wouldn't even be thinking twice about a roof. You just wouldn't. But probably the number one thing everybody asks me when they're moving here, and a lot of my clients move here, is, I want to be a place where the hurricanes don't go. Well, let me tell you, there isn't one in Florida. Okay, because you've got an East Coast and a West Coast, and you can be from coast to coast in 3 hours?
Yeah.
And a lot of times the hurricanes are just as wide as the whole entire state of Florida. Yeah. So, but there are certain places, i.e. Jacksonville, that we don't tend to get
get a little bit of rain.
Yeah, we get a little bit of rain. We get a lot of wind, enough to go and play in, but we don't tend to get a lot of hurricanes here.
I'm going to tell you what I noticed from moving down here from New Jersey. When I came down here from New Jersey,
right?
There's I call it a little bit of rain, because even with the hurricane, I feel like New Jersey, it just used to rain like all the time when it rained.
Right.
We got a nor'easter or just a rainstorm. In that area, it would just rain for 3 days. Everything would turn green, and that would be it.
Yeah.
And then here, it's like a drop of rain falls, and everybody's going wild. And I can't fathom that. I can still see.
When I moved down here, every day. Okay, so I moved down here like in February or whatever. But when the springtime came and then the summer got here, every day at 4:00. It was raining somewhere in Jacksonville.
Yeah.
Every day at 4:00, somewhere in Jacksonville, It was raining. All right. Where we at now?
Short-term and long-term investments. So let's talk a little bit about short-term, just like fix and flip type of things. I know that we do those types of loans.
Yes.
We have some of those investors. Up in Detroit, we recently talked about that.
Yes.
And how it can be valuable for people in certain markets during certain times to buy a home, renovate it, and then sell the home. This does great things for the community as well, right?
Well, like I said earlier, what I'm noticing right now is a lot of the investors are buying and holding. They're not, to this day, I have yet to have an investor go, yeah, I'm going to hold it or I'm going to fix and flip it. They all want to hold it right now. Yeah. I guess to add to their portfolio. Yeah. So I'm not getting too many fix and flips. And it's definitely not like what you see on the TV show where they come in and like, oh, we're going to do this and we're going to do that. No, it's not like that at all.
It'd be nice if it was like that, but it's way more expensive. And like I said, that's for entertainment. Like,
yeah.
I'll tell you what TV will get you. TV will get you started.
Yes.
About a quarter of the way through.
Yes.
And then you want to pull all your hair out.
Yeah. And that's when you call Douglas or Audrea and go, oh my gosh, what was I thinking? I don't know what I'm doing. There's
a lot of times in my career that I've, spoken to people and I'm like, man, I wish you would have talked to me 2 months ago. I mean, that's an ongoing thing. And I know being an adult, you don't talk about your finances with people. You're definitely not talking about your finances with somebody you meet on the internet or, you want to know them, you want to, trust them. So it's difficult, but don't go at it alone. I mean, you got to find the answers. And there's so much misinformation out there on the internet nowadays. It is really getting crazy.
I remember you and we did a deal together a couple months ago, and they were from the West Coast, California.
Yeah.
Call me.
Yeah.
And they were from California. And I took them shopping at Home Depot so we could find equipment, new materials for their house, things that they wanted to upgrade, take out and put new stuff in or whatever. And I took them shopping 2 different times to Home Depot and like, okay, this works. This is not good. This is good. No, don't get that.
Super expensive.
Yeah, it's expensive. And then if you're not working with a team of somebody that you can trust, they don't care.
Yeah.
They'll be happy to let you spend your money as long as you're going, yep.
Yeah. And you can end up in some hot water. I mean, the mortgage does play, a crucial role in home buying and investing, obviously, because nobody's got a bunch of money lying around.
I think it's definitely crucial to make that huge decision. Is this going to be a long-term or is this going to be short-term? Right. And again, like we said, life happens. It could go from short-term to long-term and vice versa. It could go from short-term to long-term. Aunt Katie's coming here from, Vermont, And now all of a sudden you're having to build a mother-in-law suite in the backyard, or short term, meaning like, hey, I'm only going to be working at this job for 3 years and then I'm moving on to, Nevada or somewhere,
That brings me to, we're going to close the show on that, because talking about short term, there's some mortgage products that we'll talk about in the next segment where benefits of an ARM, right?
Oh, okay.
And an ARM is an adjustable rate mortgage, and why that might be something that people look at as a way of getting into a home.
Right.
Now, they are always, just like if I say reverse mortgage right now to you. Right. So
my parents, I just got them a reverse mortgage, and this
sound
took
effect
us,
button.
Really, it took us 8 months to get that reverse mortgage. So that's huge.
And they're scary products.
Yes.
Right?
So let me ask you: is the products that you're talking about the short-term products or the long-term products? I mean, what if you start out with a short-term? Can you come back 6 months, a year, 2 years later, and change it into something else?
Yeah, you can always refinance if you qualify for a refinance. And that's a big thing too. Refinances aren't guaranteed. Mm-hmm. I know there's a lot of people who got into some down payment assistance programs, and then the equity's just not there because maybe their comparative market analysis of that area and their comps from that area have gone down because home prices are decreasing a little bit as interest rates go up. So maybe the equity's not there for them to refinance and get out of that money that they borrowed to get into the home in the beginning. So definitely anybody can get you into a home, but it's about how you get into the home. It's about what does month 2 look like? What does month 3 look like and year 2 look like? Right? And those are the things that, working with certain people, and like I said, the moral turpitude of certain people, I won't align myself with, because it's not about just the transaction and I'm going to send you a happy Easter text, right?
Right.
I mean, I'm always available to talk to somebody. I have people calling me all the time. Hey, man, I'll call their lender for them and say, hey, what's up with this? I'll get on a 3-way with them and walk them through it, because some of the stuff I want to know too, the end of the transaction or this specific thing that they're dealing with that has to do with their taxes. I'm not a tax professional, right? I'm not an insurance professional, but I'm going to go learn that stuff with them. Right. So they have somebody else who knows from this side, and I'm a little more aggressive than they will be. So I kind of play devil's advocate.
I ask questions that people don't even think about asking. Right. I had a client, she didn't pick me. She knew me, but she didn't pick me. She picked somebody else. But let me tell you, when they closed, she came to me because the realtor that she did hire didn't do their due diligence. And 2 weeks after they moved into their home, their water flooded all over the house. Audrey, what can we do?
Right.
And so I walked her through some steps, but if she'd had a realtor that she could have trusted or a lender that she could have trusted, she might not have had that situation happen.
Yeah. Jumping in. I mean, you want to get pre-approved fast. You want to move, pretty quickly to put in offers. Like I made a video today that says, you want to be ready to go. You get a midweek listing. Nobody's made an offer on it. You might make them an offer that they can't refuse. That realtor submits it to the seller, and the seller's like, "Yeah, let's go. Take it off the market. We're good to go." Right. And having that type of speed at your disposal is fine. But jumping in and not identifying your goals, like I was talking about before, you want to set the goal, the real goal, not just that halfway point where you think, let me get to this. We want to set the end goal. Hey, I want to retire with $3 million in the bank in such and such year, and this is what I want my life to look like. Live in that moment and work your way backwards, right? And there's a lot to be said for that as well. But we're going to wrap it up, I guess. How long has it been?
I don't know, but I always enjoy talking. So
it's fun.
We always have a great time when we're together.
So this is called the Homebuyers Huddle.
Okay, Homebuyers Huddle.
Thank you guys for tuning in. Homebuyers Huddle with Audrea from Next Home Endless Summer.
That's right, Endless Summer.
I got to remember it.
That's all right.
Because now I have 3 names in my head, which is good because it's just Next Home, Next Home, Next Home. That's all I think.
Next Home, it's all right.
Right?
Tennessee Orange, go Vols.
Perfect. And Douglas Wilkerson at Edge Home Finance, Freeman Douglas Home Ownership Network.
Your guide, your path, your compass, your desk. Freeman Douglas.
Okay, tell us when to go.